Okay, let's see if anybody's in the chat. All right. I'm going to put this down. Drop it like it's hot. And give me a second, guys. I got some technicals to attend to. All right, we are live, huh? See if anybody is here. What time is it? I think we're a little early. I got about 1 minute. People start showing up. We'll run through the rigmarole, huh? What is up, everybody? Welcome to the Russell Journal. My name is Russell, and this is my journal entry for Thursday, January 5th, 2023. All right, that's looking good. All right. You can see the balance up here coming into today. I'm not posting the trades for today. I don't like the way I'm posting those. So we will go through those and talk about them, the trades I placed today and stuff like that. But really what I want to talk about, I want to get into trader talk, trader discipline, trader things, right? I want to do more stuff talking specifically about trading itself, about the disciplines and things of that nature. Okay, as far as I'm concerned with my own personal, so you guys are the goal, my goal is to become a professional trader. Okay. This is first and foremost. This is where I want to go with my trading behavior is I want to be first. Okay, hold on. So I made okay, so first of all, how did I do today? I made $1. But my focus for today was not to make money. My focus on today is 110% data collection. I need data. From the data I gathered today, and when we go over the trades that I did, when I review those trades, one of the things that you'll be able to see is the thing that I want to talk about, and it's that I am stuck with the sudden realization that I don't have a trade setup. Okay, I thought I did, but I do not. And so there's a few things that I think are limiting me towards my growth as a trader as far as my setup goes. So let's first start out. Okay, so every trader knows, anybody who's in this thing, right? Go back to our conversation from yesterday. What defines a good trader versus a bad trader is discipline, right? We hold on, it's driving me nuts. Okay, discipline, right? Trading discipline. What defines your discipline is though your setup. And I am reaching the conclusion that I do not have a setup. Now, every setup basically has 3 points. Okay, it has entry point, it has a profit target, and it has a risk profile. Right. This is what I'm. This is where, you know, when these signals happen, I enter a trade. When we reach specific places, I take profit. And then there's always the antithesis of this is what happens when the trade has gone against me. This is how I define the trade going against me. And one of the things that's very interesting about having all 3 of those, you can define your risk then based on price action, behavior, things of that nature. And even then, right, you may have a trade setup. Your setup is playing out before you with a reward up here, but you can obviously decide not to take that trade because the risk is too great, right? So this is, and what I don't have is that risk profile. I don't have that thing where I go, okay, well, in order for me to say the trade doesn't work and that I exit the trade, I don't actually have the risk profile. I don't have, right? And I'm trying and this is what I've been trying to drive at over even the last couple of episodes is I don't have the risk profile. And without that, we are in a really tough position because I don't have a setup. And if I don't have a setup, then I can't back test that setup to get to define the edge of that setup. So right now, and especially because things are moving in a way, or my technical understanding is still got levels of growth to go to. So I'll give you, and we'll talk about that as far as the day goes. As a matter of fact, we'll just go over and start doing I'll pull this up. Hold on one second. I'll pull this up and I'll show you what I'm talking about. Okay. In a couple of things. And this is some stuff I hit on a little bit yesterday, with this, and I need to pull this up so I can see it. Okay. So we're on the 1 minute chart. That's fine. And we'll get rid of some of the other noise on this screen. Give me a second. I'll show you what I'm talking about. Okay. This still seems really noisy to me. Hold on. I'll even take all that off and get rid of that. Okay. So through my data collection, I've been able to recognize that I have no risk profile. So a few things I've tried to do in order to get rid of that. So you can see this. In order to get my risk profile or understand my risk profile, so coming into today, I was really unsure as to which way the market was moving, which way it would go. Obviously, you start out, you get this big sort of sell-off into today. So I see this move. This is kind of the direction of things, and that's good. But what I'm looking for is a reward setup. And so when I went to look for the put options, I noticed that the premium risk to reward, meaning that the delta to premium ratio. So for the put side, it was basically 2 premium. So if you were spending $100 on a contract, your delta was only 0.5, right? So your premium risk was high, was twice what the potential delta was on your contracts. I also noticed that on the call side of things, though, the risk reward was very, very, very good, right? And as a matter of fact, on some of the out of the money contracts, the premium to delta risk to reward was 5-1. And this is very good for me because one of the things I was beginning to realize is this would allow me to have more size, right? To be able to scale, to have a bigger size position. And so when I came in, I actually came in right off of this low right here, right in here. I waited for this break of the slow stochastic out. And I was able to I took a position, the 384 contracts. I paid basically 12 cents a piece for them. And I was able to ride them mostly. I rode them into this peak, and this is where I took profit. It was a 25% gain for me on this one trade. Basically, I made about $5 or $15 on that one move for those 5 contracts. And I sold them as we began to reject at this level here, partly because of this breakdown point right here. I thought, okay, well, this rejection isn't good. What I left on the table here was this move up here, and that cost me because this move, this last part of that move would have put the premium up on those contracts at 100%. So I would have doubled my money here had I had some sort of thing that would have allowed me to hold that. But I'm looking at my judgment here, and this is where I began to sort of see some of the hole in my swing. So I'm starting to identify a risk reward setup here as far as that goes. But how that plays out in the trade and in the chart, I am absolutely missing that piece of the puzzle. As far as this goes. So the next two trades that I would place today were they weren't fly-by nights. They were very calculated things that I did. My next trade came in right here at the bottom. I actually, into the wick of this candle as it was wicking up, I entered the trade on that position. It was when I entered this trade, it was defiant of my slow stochastic. However, we did catch that. We caught the move up. Here, there was another thing about this trade that I wanted to see. I wanted a log of and understand was at this point, the same 384 contracts were offering a 5-to-1 premium cost to and the cost of my premium to the delta. Okay, so my cost here is about 8 cents. And I tried two different contracts from here. One was further out. It only cost me that only cost $5 or 5 cents a share. And I wanted to see what the ratio would be or how it would perform. Again, very small, only one contract on both of these, mostly as a way to sort of track how that delta might affect the contract and how it might affect any sort of move inside of the market. And sort of learn and understand some of those things. Again, very small risk. I'm not going to go crazy on this stuff, trying to spend real money to learn this stuff when it's just as easy to go and paper trade it. But I was in it here, and again, the premiums were very cheap, so I wasn't afraid to. On those last two, I did wind up losing the majority of that money, which totaled right around $14. And for my $15 win, I'm basically flat on the day. I felt as though that was acceptable to gain some of that information. Some of the things that has now made me realize is that although you do need to look at the premium to delta relationship as far as whether or not taking a contract position is viable or not, there needs to be something understood for those are things that involve with your contracts intrinsic value as to what those contracts can pay, but they do not count for the extrinsic value. Okay, so and this is where again I'm having difficulty establishing the entirety of the risk profile. Today was, again, my goal right here is one thing that's been made very, very clear to me is that one of the things that's been very, very clear to me is that I really need to establish the data set that shows the back test of my strategy. It shows the edge that honestly produces, and it does show the risk, right? What I stand to lose or what I'm willing to lose. So I needed more of an understanding of the movement of extrinsic value. Now the cool thing about this, and I'll show you, this is pretty cool. When I looked at this, the cheap premium that I paid, the low end, because of the risk reward, because of the delta to it made the bottom end of my contract, the risk profile, it did make that a lot less. And as a matter of fact, I held through most of this stuff. It was even, my contract even got green. I'm going to move this over a little bit and show you. So I held through most of this. There's a few things that I learned here. One, through this, I was safe to hold through this. I was never read more than of the contract a half a cent. So I was only ever down 50 cents for the whole position on this. But what I did see, and then when I caught being able to do that, I was able to catch this move up here. It did put my contract up 50% in this one move. But once this move rejected right at this level, it ate that intrinsic value up very, very quickly. So I could have brought back $4.50 to my position had I sold that. But again, I really wanted to see what factors were going to play out that may told me, hey, you should exit this position, or hey, you should hold on to this position. And again, it was very cheap. It was I as far as I'm concerned, I was buying information. So going through the rest of the day. So I held through most of this. The thing that I found very, very interesting about this position, when this moved up, I did cut the 385 put or call that I held. I did cut that position, but and I think that was the small red. And then I held through this move down and this move back up. The thing that I found really interesting at this point right here, I was green $4.50 for the whole contract. And for this point here, I was still in the red 50 cents. So that gives me some sort of stuff about the risk profile. The other thing that I am also, and this is really one of those things where it's like this move, sure, I would have caught the move. I would have made money here, but this move even higher on my contract did not profit. The position was still red at this point. So I find this very, very interesting, and I'm not exactly sure on what this means for 0-day to expiration contracts. I mean, there's a bit of me that thinks, well, you just need a mindset of get your money and get out. But the sad part about this, one of the principles of trading is to be quick to cut your losers and let your winners run. Where I am with this is that if I do not figure out how to let my winners run, my gains will never outpace my losses, regardless of what my risk profile is. Okay. So about the only thing I think at this point that I could have done here is move a stop loss to break even and hope for the best, or try and catch the next leg up. That never happened, and I wouldn't have lost any money. I think that probably would have been about the best thing that I can do. Again, that is the problem with that, and that's a nice logical statement, but the problem with that for me is that there is no clear signal in here to me that says, what is the thing in here that says move your stop loss to break even? That's another piece of this. And another problem that I'm having with my setup is that, again, I don't have that risk profile. I don't know what that risk is. Again, I've got some indications as to what that should be. I've got some indications as to what options to buy that will mitigate risk a lot better. But I don't have a clearly defined risk parameter. And so if you guys have any suggestions, if you trade options and you have any suggestions, or you know anybody I can follow who is really good on this, I'm definitely asking, because I would like a shortcut to find this out. What a good risk profile, where to define your risk at. That's really what I want, really what I'm looking for. So again, these two positions kind of happened at the same time. It was a vertical spread where they were both calls. I cut the one and I kept the other, and I actually wound up cutting this position back over here on the break of this low right here. I figured there's a couple of things that made me cut it. One, power hour. I don't like to trade power hour. I'm removing that as something I want to do. Again, I think a lot of hoodoo voodoo happens there. It becomes the Bermuda Triangle of technical behavior. So I don't like to trade power hour as of right now. The other thing is tomorrow we do get non-farm payroll numbers, and not that that's anything other than it's a pretty major report. I don't, most of the traders, the guys who I know who are successful, actually they don't trade through earnings and they don't trade through major reports. So obviously not holding a position for tomorrow, and we will see whether or not what the chart lines up for as to whether or not I even actually trade. Those days tend to have a lot of chop in them. And lately it's been a pretty choppy market as is. So that's things that are going on for me as a trader. Again, just to reiterate, I think parts of my setup are starting to establish themselves, risk to reward, delta to premium. That's going to be a big deal. Premium to delta. I don't know if that's risk to reward. If I want to call that risk to reward, I don't think I do. That's some of the stuff that I'm working on here and trying to think about as far as like my trading goes, my behavior goes, how I'm hoping to improve as a trader. There's other things too that I want to keep again, and I don't know whether this is true or not, or this is good or not. Maybe I set my risk based on performance. Again, right now, my performance shows a gain on average of $10 per trade, a loss of $15 per trade. I haven't had a $15. This is the closest to yesterday I did. I had a brutal loss yesterday, but I didn't trade my setup either. So again, I think part of what let me, what influenced me to trade against my setup and against my discipline, I think a lot of that comes down to the fact that I don't have a true risk profile. That's a problem. So again, a lot of like the first 3 months, the first quarter of this year isn't going to be about really trying to hit those numbers. It's not going to be about trying to make so much money every day as it is establishing my setup with my buy signals, my profit targets, my risk, right? And I think it's going to be really about defining what the edge of that setup is, right? Knowing what the edge is within that. But again, without that risk profile, it's hard to say what the edge is because, the gains could be consistent, but the losses could be all over the place. And as you can see, yesterday I had, a $34 loss from not even following anything that was related to my setup. And today I wound up green on the day, just barely, but I'm still a $14 loss, which is better than my average. So as far as I'm concerned, that's good. Shows improvement, I guess, for me as a trader. That's really a thing. And really not until I wake up tomorrow, as far as like see what the options chain does tomorrow. And that's another thing. So tomorrow we have a major report, which just like yesterday, those major report days, it plays haywire with the options tree. Like, and when they come out, your premiums can be sky high with low deltas and low gammas. And so a big reason to not trade options tomorrow. Yeah, sure. There'll be big swings and big moves. Perhaps that could happen, but the premium you're paying to trade that is very, very high, which offers you a very high risk in the event that trade goes against you. So again, we'll be watching that options tree as far as like what trades we're doing. I'm thinking basically where I'm thinking is as far as like the beginning of testing this setup. I think again, if my average win is $10, I want a minimum of 2-to-1 risk to reward as far as that goes. So I'm going to probably set just the arbitrary number of $5 as my loss, my willingness to lose, and see how that does, and how that does. And then where I can mitigate this is by playing those contracts that have a better premium to delta ratio. Again, like I said, as I held through all of this, we didn't get to a lot of move, but I was never really red. And when I did get up into here, I got green very, very fast. So that may help me. It may have to be just an extrinsic value until I have more data. So that's kind of what I'm thinking. Again, go ahead. Tell me what you think. If you have any sort of idea, how do you set your risk? What do you decide is your risk profile? Do you trade options? Any sort of thing as far as that goes. The other one bit of housekeeping I want to keep in mind is right now I'm really thinking about putting together just, my goal for this channel is for me, the best thing that could really come out of this is find, 2 to 3 other players who trade options that we can sort of talk about. We can talk about our trading and our performance with inside of that. And so if you're interested in that, email me at the Russell Journal at gmail.com. And we'll compare notes and see whether or not our setups are similar enough that we can, have one of those iron sharpens iron sort of things. I'm not charging. It's, I'm just looking for friends, I guess, for trading friends. So anyway, that's going to do it. That's pretty much the show for today. I don't think there's a lot else to really talk about as far as things go. If you have anything you want me to cover, let me know. But that's going to do it. The Russell Journal, written, edited, and hosted by me, Russel Liss. We are produced by Social Media Shows. Our executive producer is Pureza. If you're interested in a show like this, they can help you out. They can stream you across a bunch of different platforms and help you work through some of the technical side, lighting, background, green screen. It's not all that easy. So I'll tell you, I have no financial affiliation with them. They don't pay me anything for plugging that, but I do like them and I want to help them out, and they help me out. So anyway. Until tomorrow, though, guys, just, I guess, pretend I have a catchphrase.